We're looking for a setup in SPX 112 Bear Trap. I have a number of positions. I think I have a total of 5 right now, and I'm going to add one more. I was looking for an expiration somewhere around 52 days until expiration, but none is available right now. Closest we have is February 17th, which is a monthly expiration cycle. So we have 2 expirations on the 17th. One is the monthly, one is the weekly. So the monthly options, they stop trading on Thursday with Friday AM settlement. And then we have 17th of February options. These are PM. They trade all day on Friday and they settle at 4 o'clock. I already have a position on in the February 17th expiration AM settled, so I'm going to try to avoid those, and I'm going to go with the SPX PM options. These are 59 days until expiration. So the trade I'm looking for is a standard 112 Bear Trap. The way I set this trade up is I go and I look for an option to sell first. I go out of the money. S&P right now is currently trading at 38.15. I'm going to go out of the money, and I'm looking for a put that is trading right around $9. So right now this is a 31.40 strike. I'm going to sell to open 2, and then I'm going to look to buy to open a 30-point wide put debit spread. I'm looking for a put debit spread somewhere in the neighborhood of about 35 delta. 37 right now, 3700 is at about 35 delta, so we'll go with that. So I'm going to buy to open 3700, and then I'm going to sell to open 3670. This will put me in a 112 bear trap with a fairly decent size of the bear trap, given that S&P is down about almost 8% in the last 5 trading days or so. So we have a decent move lower. Not to say that we can't go any lower, but I think that odds are that we're going to see some sort of a short-term bounce. If we don't, that's fine, right? We have a nice area where we're going to make the bonus, or we're going to make the bear trap profit, as long as we don't crash. And when I say crash, I mean 10-15% down move in 2-3 days. Anything other than that, if we go higher from here, that's fine. If we drift lower, that's okay too. The only thing I really have to worry about is a sharp move lower in a very short period of time. So this bear trap is currently going for about 870 credit. I am buying to open 3700, 3670, and I'm selling to open 3140 put. I'm going to try to collect $8.70. As far as management goes, there's really not a whole lot to do unless price gets inside of the trap, and we are somewhere around, I would call this 3600. Once we start to go through 3600 on a downside, obviously this position is short gamma, and I'm going to start to accumulate positive delta, which I'm going to try to get rid of. Not all of it, but some of it. And once we are at around 3600 or lower, I'm going to look to either buy puts to reduce my net long delta exposure, or buy put spreads. One thing I don't want to do is sell call credit spreads, because this does not fix my short delta, short gamma and positive delta problem. So for right now, this is my trade. Now it's the price is dropping. Obviously, the market is pushing higher a little bit right now. So I'm seeing mid between 870 and it's 850 right now. I'm going to go in a little bit higher and kind of work my way down. So I'll start at 870. If I don't get a fill, I'll lower my price, working towards the mid. Mid is currently at about 850.